Hello and welcome to the Genuine Learning Blog. My name is Melisa Galasso and I am so very excited to be here today to talk about a major change to the lease standard. Yes, the lease standard that will be effective in about, a couple days. So I guess today is December 1, so we're about 30 days away from the effective date for private companies. And we are making changes, or I guess we're proposing changes to this standard. And this is going to be really important for private companies, but also has a public company impact. So we're going to take a deep dive this week into this proposal. It was issued yesterday. So we have been kind of patiently waiting, maybe not so patiently waiting on my side. They voted on this back in September, but obviously writing the standard takes quite a bit of time. And so it was issued on November 30th. At the time that they voted, it was a 45-day comment period. So comments are going to be due January 15th, 2023. You're probably saying, but Melissa, you said that the leases standard's effective December 31st. It is. And so we know this is going to be a very interesting transition as we go through this, because we really have to be careful here. One of the lessons learned from revenue recognition is that you cannot early implement a proposal. You must wait until there is an issued standard and then follow the transition guidance in the effective standard. So I do want to make sure we're very, very clear here. You cannot use this proposal as a reason to not implement leases. Therefore, if you have a client or you yourself have to issue financial statements in January or February, it is unlikely that this proposal will be finalized. If the comment period isn't due until January 15th, they then have to go through all of the information. They have to hold a meeting and then they have to prepare a final ASU. And that is likely going to be March before we see anything. So if January or February are your target issuance dates, then standard, unfortunately, is unlikely to be of a lot of assistance. If you can somehow convince whoever wants it in January, February to wait till March, then you would be able to adopt it. Again, assuming this is finalized. That's why you can't rely on a proposal. You have to wait for it to be final. So I do want to encourage everyone to consider providing feedback to the FASB. I think it's that important. So I do want to really encourage everyone to take a look at this and provide feedback, because the feedback they had been receiving, which is why we have this standard being proposed from private companies, was around the enforceability of the term legally enforceable when we had related parties under common control, right? So when we looked at some of the requirements there, it said that you had to treat related parties like unrelated parties and look at the enforceable terms and conditions. Well, what we know from private companies, and particularly private companies under common control, that these are not in writing. They were in writing, but they expired 10 years ago, but the lease is still going strong. They are not very clear or consistent in terms of the terms. I was actually teaching the other day and someone said that it was a mother-son agreement. And the mother told them every month how much the rent was based on how much she budgeted for in terms of her expenses. So literally, private companies under common control make for very difficult accounting when we have to look at what is legally enforceable. And so this was a change from the guidance that was in Topic 840, because Topic 840 talked more about the economics of the arrangement. This talked about the legal enforceability. And so when you talk about legal enforceability, in particular related to related party leases, what we found is that people said, well, I might need to go get a lawyer. I might need to go and get a formal legal opinion, because literally there's nothing in writing. So you have to look at what your state law is. Does it have to be in writing? How long can it go without being in writing? And so people started saying, hey, this is really not operable. These are between related parties under common control. We can change this pretty much at any time, and it would work, because that's how close we are. And private companies tend not to put as much into writing. And so as a result, it was creating a lot of confusion. In addition, it was creating a lot of work for these entities who, again, can change the terms at any time. And so we wanted a way to really evaluate how could we make this easier. And so the scope of this issue, because again, there are two issues in this standard, is for private companies and most nonprofits. So it does not apply to public entities, nonprofits with conduit debt, or employee benefit plans that file under an 11K. But if you're a private company or a nonprofit without conduit debt, then this standard is really written for you. and it's going to provide a practical expedient. It's a little bit of a carrot to encourage you to put things in writing, because if you decide to put that lease in writing, you are then permitted to use the written terms and conditions to determine whether a lease exists, and if so, the classification and accounting. So if you say it's a 1-year lease, it is a 1-year lease. We're not looking at implied terms. We're not looking at modifications. We're not looking at what the legal agreement is. If it says 1 year, it is 1 year. If it says 5 years, it is 5 years. And so when we look at the term of the lease, when we look at the substance of the lease, whatever it says in writing is going to be the accounting. We don't have to consider the legal enforceability. We don't have to go through all of the effort that we have been hearing from private companies related to trying to figure this out. So we can make this a little bit easier. This is on an arrangement by arrangement basis. It is a practical expedient, should get you approximately the right outcome. And so as a result, entities can make this determination again, so long as they put it in writing. If you don't put it in writing, then you cannot apply the practical expedient. No lease in writing, cannot do this. And so I think that's really important. You would have to go back to the legal enforceability of the terms and conditions. You would have to go back and do this. So they are giving you a carrot to put it in writing. Now, what if I've already done this, right? What if I've already implemented, I was an early adopter of this? Then in that scenario, you can then do it either prospectively to new arrangements after that date, or you can go back and retrospectively correct in the following year. So that is an option. If you haven't yet adopted, which is again why it's so important, then in that scenario, you could just apply with topic 842 using the same transition method. Now, here's the catch. And I think, here's a plus. I think we want to thank Sue Cosper for this. I think she did a great job when she was doing the conversation here, which is we have some risk if we have to put this in writing before December 31st, because then it has to be before the end of the fiscal year. But we don't know if this standard's going to happen. It's a 4-3 vote. 4 voted in favor, 3 voted against it. So we want to be careful here. If one of those 4 turned into the other side, this ain't going through. So as a result, she proposed this really nice transition option, which says regardless of transition, you can document any unwritten terms and conditions prior to you issue the financial statements. So theoretically, you can actually document the terms of a lease that expired on 12/31/22 in March of 2023, and it would still count. So I think this was really to help with transition as we look at this. So definitely a key consideration there. And so hopefully this helps. However, people said, well, if I document that it's 1 year, because I don't want to do all this, right? So I don't want to go through and put it on the books. I just want to do our normal rent expense as we're going through it. What if I have leasehold improvements? So obviously leasehold improvements are problematic because topic 842 requires that leasehold improvements be recognized over the remaining lease term. And so when we look at, or technically over the shorter of the lease term or the useful life. And so if you make it 1 year, these lease terms obviously have a very long time. And so the feedback that was received, again, when they are under common control, is that they typically don't faithfully represent the actual economics. Because again, we know we were probably going to be here longer than 1 year, but we're making the lease 1 year for simplicity purposes because of the common control element. And so as a result, this is going to be a big issue. So people are like, well, I don't want to write off all my leasehold improvements in 1 year. So what can we do about this? So again, this is a little bit interesting because as I said earlier, issue number 2 applies to all common control entities. So it's any entity, whether it's public, private, nonprofit, everybody. So this would be a change even for the public companies who have already adopted this standard way back in 2019. So this would be for all common control arrangements. And basically what they're proposing is in this scenario, because we're related, if I amortize it and there's leftover items, I'm just transferring it back to my related party. And so you would amortize the economic over the leasehold improvements over the economic life of the leasehold improvement, regardless of the lease term, as long as you have control, right? So as long as you have a lease and you control the underlying asset in a lease, then you get to amortize it over that period of time. Now, what happens if this lease is that the lessor got the lease through control that's not within the same common control group? Then there is a maximum, which would be the lease term. But basically, in this scenario, the leasehold improvements would be subject to the impairment guidance that's in current 360, property, plant, and equipment, but the amortization period would be extended. Now, what happens if I leave early, right? So, it's a 20-year leasehold improvement. I decide after 10 years, I'm good to go. I'm going to transfer. I'm going to move somewhere else. Obviously, there's 10 years left of unamortized leasehold improvements. At that scenario, it would be accounted for as a transfer between entities under common control with an adjustment through equity when you no longer control the use of the asset, because it goes back to the lessor, which again is under common control. So I think this is a very interesting one because it isn't just for private companies. It would actually change the accounting for all leases that have these leasehold improvements under common control. So I think that's a really important consideration here. In terms of transition, obviously, if you haven't yet adopted this, you would adopt it with 842 using the normal transition methods. They do give you a little bit of adjustment for the retrospective option if you choose to go that route. If you've already adopted 842, because again, all those public companies, they've already adopted this. They would have the option to either do it prospectively to all leasehold improvements after the date you first apply this, or prospectively to new and existing. So you can make an adjustment to the existing ones and start for a longer period, or you could go back and do a retrospective. So you have 3 options there. Here's the catch. They didn't actually propose an effective date. They said they would determine the effective date after they consider feedback. So please, please, please make sure you provide feedback to the FASB that you want this 4-year transition with 842. Otherwise, you're going to have all these leases that you're going to have to fix next year, unless again, you can't wait until this gets issued as final. So both issue 1 and issue 2 would be effective for all entities during the interim periods within the fiscal year of adoption. However, if those entities have not yet applied 842, which again, for some of them would be very true, then in that scenario, it would not be applicable to those interim. So we really need an effective date that works for private companies, guys. So you really need to be giving a lot of feedback to FASB here that we want this now, and we want it as expeditiously as possible, because we know, for example, construction contractors hugely impacted by this have to meet certain state guidelines. We know a lot of the related party, like trucking type items, really need this done quickly. The more relief we can give to private companies, the better. So I know this is a longer than normal blog, but I'm really passionate about trying to help private companies implement the standard in a way that is feasible, right? We have to really find a way to get forward, and this would be a huge win for a lot of these entities. So I want to make sure the FASB is hearing what we are needing in this scenario. Now, if you have any areas where you think we could improve on this, let them know. They are all ears at this point. This is your opportunity to provide feedback. So again, feedback is due in January 16th of 2023 with a 45-day comment period. All right. I know I covered a lot. Hopefully you are as passionate as I am about trying to get some private company relief in this area. It was a 4-3 vote. Obviously, in this scenario, one of the comments was that it would go back to what we basically have today, which is the lease is not on the books and the leasehold improvements back on the books. And that was the biggest concern, I would say. I would definitely read the basis for conclusions because there is a dissent in there. 3 people dissented. So you would want to take a look at those board members who dissented and see and understand their perspective. But if you like this, then you might want to convince one of those 3 people to join the other side. If you don't like this, then you might want to convince someone who is in the majority to vote no. So again, it's up to you how you want to vote and how you want to influence. But I want to thank you guys so much for joining me, and I look forward to seeing you next week on the blog. Have a great day, guys. Bye-bye.